The financial system is confusing. Look, I'll admit it. It is. David will admit it as well. But what if I told you that those complex terms are deliberately complex to keep you ignorant of what is really going on? Some of these things are actually far simpler than you may realize. It's just a matter of visualizing it in the right way. Well, that's what David and I are going to try and help you do today with some of those terms that you've heard floating around. QE, Treasury buybacks, rate cuts. They've been in the news recently, but no one can tell me what's actually bullish for Bitcoin and what's actually negative for Bitcoin, or whether you should even pay attention at all. Welcome to 1% BTC. I'm Dominic and this is David, and today we are looking at key terms that you should know. Now, once again, we are going to try and make this as open and honest for the average retail investor. So if you're sort of a finance expert, you may find this a bit basic, but we do want to help anyone moving on their financial journey to basically get up to a normal level and a decent level of understanding. But none of this is financial investment, tax, legal advice. You should have consulted a fiduciary before making any legal decisions. All investing is risky, and investing in Bitcoin and digital assets is extremely risky. Once again, we try our best to provide a balanced view and obviously explain things in simple terms. But sometimes by doing so, we may get the information slightly wrong. If we do that, please let us know in the comments and vent your frustration at us. So, David, we have seen some of these headlines over the past few weeks. We saw that, was it yesterday? We saw the Fed launch 40 billion in debt buying scheme. What did that end up with as the score? Was that
was a 0.5. It was a non-event, so it was quite, yeah.
But it sounds bullish, doesn't it?
It does. It does.
Sounds bullish. Sounds like liquidity is coming. What about this one? We spoke about this last week. Did this get a high score, or was it once again a nothing burger?
Again, a nothing burger.
Yeah. What about this? We haven't discussed this one yet. This is obviously just relatively recent news.
Yeah.
But obviously interest rates. Now, what's the sort of general opinion of what Bitcoin's price should have done when they cut interest rates by 0.25%?
It should have pumped.
Should have pumped. What did it do? We're down 17% since over the past year. Where was my pump? And once again, it's because people do not understand the difference of what these headlines mean. And it's also because a lot of the time, these events are already priced in. You could go on Kalshi, you could go on to Polymarket, you could go onto these prediction sites and actually see that what the odds of these events happening. And it was an 89% probability for the past few weeks that they were going to cut rates. The only contentious part was by how much. So any movement in risk assets arguably was already priced in. But let's go through these terms. Now, for those of you that watched our Treasury buyback video, I think we released it a few days ago, but obviously we'll put a link to it in the description. We advise you to go look at it. But just to provide a bit of context, what you want to think about is who. Now, this is provided by the US Treasury. They're buying back older bonds. Yeah, nothing new, just older bonds. But the key thing here is the reason they're doing it is to improve market liquidity or manage debt maturity. Now, that may sound like it's still a bit complex. So what I want to try and get across to you is think of it in terms of liquidity, because you'll always hear Bitcoiners or anyone that invests in risks, specifically tech, talk about liquidity. Treasury buybacks do nothing for liquidity. Yeah, it's one bond being swapped for another. That is it. There is no new money creation. So in terms of its impact to Bitcoin, it's mostly neutral, although the headlines sometimes spread like wildfire. It's a nothing burger. And that's what David and I wanted to get across to you last week. So think of it like this. No new money is injected, no liquidity, no direct impact to Bitcoin. Any movement in the Bitcoin price is either highly coincidental, yeah, or it's just because someone has misunderstood the narrative and they're taking the opportunity to pump the market. But it will be a short-term liquidity pump because someone's just done it to, maybe I can use this to artificially boost the price.
So the U.S. government is only buying back its own debt, right?
Correct.
So
yeah,
it's pretty basic. So they're putting cash back into the financial system, and reducing the debt that's floating around there, right? So
That's right.
it slightly improves liquidity, but it doesn't really pump Bitcoin.
No, it's just, I love thinking of it as it's like buying one bond and swapping it for another. That is it. You're not creating any new bonds. You're not creating any new money. You're just saying, okay, I'll trade you this for that. That's it.
Right.
And
right.
like the headline we saw last week where it's 12.5 billion, sometimes people just get carried away with the number because they don't understand what it means. And instantly people within the Bitcoin space, or especially the altcoin space, will jump on it and say liquidity, liquidity, liquidity. No, buybacks, no new money. So please ignore those headlines for the most part. Now, reserve management purchases. Now this one, David, is one that we spoke about yesterday. So who's it done by? Not the Treasury, the Fed. But what are they buying? Short-term Treasury bills with durations of weeks to months. Now, the reason they're doing it is to keep bank reserves from getting too low and prevent funding markets from breaking. Yeah. So what does it mean in terms of liquidity? Once again, it does inject liquidity, but only into the banking plumbing. It keeps repo and money markets functioning. That is very different reasoning to basically, hey, I'm going to push investors into risk assets. I want people to go out on the risk curve. It does not do that. And it also does not lower long-term interest rates. Doesn't affect any of that. So yes, does it improve liquidity? Slightly, very, very slightly. But as we discussed in our video yesterday, it basically, don't think of it like it's going to make things amazingly better for Bitcoin. What it does instead is just reduce the sudden liquidity shock that could force Bitcoin selling. So it's good for Bitcoin. It basically could prevent it from going lower, not going massively higher, if that makes sense. It's not going to do anything by itself.
So we could think of it like topping up oil in an engine so that it doesn't like freeze up, right? Or it's not like pressing the accelerator to make it really, to give it superpower. It's gonna just, it's maintenance, right? It's keeping the engine running.
Correct. So yeah, as David was saying, it's keeping the engine running. And if your engine's running, when you go to get it serviced, basically the reason you do that is to decrease your risk. Yeah, and that's exactly the impact this has on Bitcoin. Yeah, they are making sure from the Fed level that the banks have enough money to perform their short-term operations. It's the same reason why if your petrol gauge is running low, you'll go and put petrol in it. It's because you're worried that there may be a risk to that short-term you could run out. So you might just go give it a little top-up. It's not saying, hey, we need to literally fill up the tank because we're worried the petrol is going to run out entirely. We need to fill up the tank and all these barrels around it and load up the car with as much petrol as we can get. That's QE. This is not QE.
I do confuse it. I do confuse reserve management purchase with QE, and it's really important to separate. What's the difference between the two, right? So reserve management purchases are short-term T-bill buying, right? It's not long-term. QE is long-term, right?
Correct.
So yeah, okay.
Yeah. So is that starting to make sense? Because I know that a lot of this is confusing, but the quantitative easing, as David said, what did you say? Long-term treasuries. Yeah. The one part that I would add to that is obviously and mortgage bonds as well. Now, the reason they do that, this is them almost admitting something is terribly wrong within the financial system. Yeah. So their aim is to give markets back a sense of, don't worry, because there's loads of money around. Everyone will always be able to fulfill their debt obligations. No one's going to go bankrupt like in 2008. They pumped QE came about. They pumped money into the system to basically reassure markets. Yeah. Now, what does it do to liquidity? It does expand the balance sheet, but the key word here is aggressively. It is not like the previous item that we looked at. It is large in scale. Their aim is to suppress long-term yields, and they want to force capital into equities, real estate, and alternative assets like Bitcoin. So Bitcoin is just one of the many winners in the event this happens. Unfortunately, because of inflation, the inflation this causes, we're all losers as a result, unless you're an asset owner, which is why David and I want to try and push you into actually building an asset portfolio by putting your first % of your savings into some form of investment, whether that's Bitcoin or not. But obviously, this does create excess liquidity beyond just system stability. So if we just go back, just a reminder, reserve management purchases are more about providing that short-term stability. they want to decrease that sudden liquidity shock factor, yeah, on the overall market. This cash becomes abundant. Real yields therefore fall. So the fiat debasement narrative that underpins both gold, Bitcoin, and silver gets massively strengthened, because the idea that the governments are going to continue to print because they've got no option to keep the system solvent other than to continue to print money holds. So therefore, historically, good for Bitcoin, good for gold, but also good for risk assets, because people will say there's money everywhere. I better just get some as quickly as possible and throw it anywhere that sticks. So risk creation based liquidity. It is liquidity. This is one of the best things that could happen for risk assets or for debasement narrative based assets like gold, Bitcoin, or silver. It's not just system maintenance, and it's, oh, I've given you 2 points, the same point twice. Fantastic. But yeah, as I said, risk creation, liquidity.
So QE is historically the strongest correlation to Bitcoin price rallies, right? Whenever we see QE increasing, we see Bitcoin rallying. That's really an important signal for Bitcoin.
And that's why, that's a really good point, David, because that's why you see so many influencers specifically jumping on this bandwagon of anything that the Treasury or anything that the Fed do. They're like stealth QE, stealth QE. Well, they won't call it QE because it's not QE, but they'll call it stealth QE because they want the average person to think, oh, the Fed are performing a form of QE. They've just renamed it. Yeah, but the truth is they haven't. It's slightly different. Now, obviously, we don't know exactly the reasons that they do these things. I think it was in the last video that we pointed out that when it comes to reserve management purchases, that yes, it is just about keeping the short-term lending going for banks. Yeah, it's about stress management. Yeah. It does point out system fragility nevertheless. The difference is quantitative easing is basically pointing out, no, we've got a major problem here. We need to do something about it. So on to the fourth one, final one. Interest rate cuts. Now, everyone should know this about who this is by. Obviously, it's by the Fed. Everyone watches Jerome Powell like he's the biggest celebrity on the planet every time he gets the podium to talk about whether there's going to be interest rate cuts. And that is, in terms of what it does or why they do it, they basically decrease the Fed funds rate, so the overall interest rate, and it reduces the cost of borrowing across the economy. Now, a lot of people confuse this with everything else we've started. I just want to make it clear. It does not create new money. Yeah, when rates are cut, it does not create new money. The interest expense is lowered. So therefore, the cost of refinancing decreases. It becomes easier for people like you and me to get a mortgage. It becomes easier for others to lend out, to go get a loan, and therefore they can then spend that money within the economy. Yeah, so it helps cash flow conditions, both on a personal level, people like me and you, but also at a systemic level where there's more cash moving throughout the economy. So encourages borrowing and risk taking over time. So the impact of Bitcoin. Rate cuts equal improved financial conditions. People are more willing to take risks and have an improved risk appetite, which obviously helps support Bitcoin, because Bitcoin, despite being seen as a flight to safety, as old Larry Fink at BlackRock might say, it is still seen by many as a risk-on asset, meaning people only will invest in it when they've got money to spare. But it doesn't really kick off until balance sheet expansion, something like QE, is required to make it move explosively. So for all of the, because I know David and I were speaking about this and sort of saying that how frustrated we were specifically with the interest rates, that people were reaching out and saying, he cut interest rates by 0.25%, and we've seen the price of Bitcoin go down. Interest rate cuts alone are not going to move markets unless it's something unexpected, or unless it's a large cut. For instance, if we got a cut of 0.5%, maybe 1%, that would be in one single Fed meeting. That would be a huge signal that the market is in stress and they need to do something to help the economy. Yeah. If we saw this 0.25% cut in line with them announcing that they're going to restart quantitative easing, then it would have more of an impact. They have not announced they're going to start quantitative easing, they've announced that they are going to stop quantitative tightening. It's now stopped, but they've not announced they're going to restart quantitative easing. So yes, rate cut good, but until the catalyst is there to light the fire, it's not going to make a difference.
Right. So let's actually kind of understand what's actually happening. So banks, when the Fed cuts their interest rates, the banks can borrow from each other more cheaply, right? So that means if you have savings in a bank account, you get a lower rate of interest for that savings, right? But it does take a while for this to kind of show in the economy, right? What happens when Jerome Powell makes an announcement of a cut, that's going to take a while for that to filter out into the economy, right? And I think that's why we're not seeing a huge, reflection in the price of Bitcoin. It typically, when you look historically, when the Fed, actually Bitcoin does drop a little bit before, and then it starts to come up, but it takes a while.
That's it. It's not, the Fed uses their language and the way they put things across more so than the actual cut. If, for instance, they indicate that they're going to cut, then if markets suddenly they see inflation spiking and everyone sort of running to pushing prices up and buying everything, then obviously they don't need to go through with the cut. It's more about psychology. So by the time the actual cut comes, if it's expected, as most of the time it is, then you wouldn't see any dramatic change in the price of these risk-on assets. Yeah, or you shouldn't do if the Fed's doing their job correctly. But let's just cover off the key differences in a table that you can easily visualize, guys. So, David, I'm going to give you a quick quiz. Who are these two gentlemen? One on the left, Treasury Secretary.
Percent.
Correct. And who's your best friend in the middle? All these.
Right, Jerome
Powell. Now, to summarize, you need to think about who's buying. Who's performing the action? Who's buying in many cases? So the Fed or the Treasury, and not the same entity. What's the maturity when it comes to bonds? Obviously, this isn't in regards to rate cuts, but is it short versus long duration? And why are they doing it? Is it plumbing? Is it to do something operational, as David was saying earlier, or is it for stimulus purposes? Is it to boost the economy? So once again, Treasury buybacks, formed by the Treasury, they're buying old bonds, swapping one bond for another, and they're doing it once again as normal part of normal operations to improve market liquidity and manage debt maturity profiles. Think of it like repainting the walls. It's boring, it happens all the time, and it's nothing that you should really expect to move the price of Bitcoin. Reserve management, the one that confused even myself and David, just because sometimes this terminology, you're not sure whether it actually is a form of QE or whether it's not, because the Fed has got themselves in such a position where they rename things so frequently, you're not sure whether they're just doing a form of stealth QE. Reserve management, from what we can tell, is not a form of stealth QE. And the reason for that, once again, is the maturity date on the bonds, so the treasuries they're buying. They're buying short-term treasuries. And the reason they're doing it, once again, it's operational. It's to make sure that there is enough liquidity in the system for the short term, not the long term, to make sure banks' reserves don't get too low. They can lend to each other. So think of it like a fire extinguisher for crashes. They've got it there, and it's there to use. Yeah. The fact that they have a fire extinguisher is not the problem. QE is the one that everyone needs to watch. And that is because what they're buying is long-term treasuries and mortgage bonds. These have real big impacts on the market when they start disappearing, because it shows that the Fed arguably is losing control. Yeah, and they need to do something to reassure the market. And they do this specifically to push investors onto the risk curve. Think of it like fuel on the fire. But QE, although it has the most impact on markets, can have further things that ignite the rocket even higher. So when you get QE combined with interest rate cuts, which is obviously performed by the Fed as well, which are aimed at reducing the cost of borrowing to stimulate growth, then you've got the complete rocket ship for market ignition. So these are the two, quantitative easing and interest rate cuts, that you want to be paying attention to. So interest rate cuts, monitor. Reserve management, obviously, if you see the size of those reserve management operations increasing, that's something to be aware of, because that could be a sign of actual stealth QE. They've said they're going to do 40 billion a month. If you're now seeing that go to 100 billion a month, then yeah, that may be actual form of stealth QE, and they're trying to tell you it's reserve management, but it's not. So for now, what I'm saying is I would ignore Treasury buybacks for the last part. I would keep an eye on the reserve management, but only to see whether there are any changes and how long it goes on for. I would definitely keep an eye on to see whether they say that they're going to restart QE. Once again, they haven't said they're going to restart it. They've just said they're going to end quantitative tightening and interest rate cuts. Trump is very keen to get those interest rates down. Now, if we see any cuts next year, I would say that are above 0.25% in one cut, or if we see multiple cuts regularly, then, or any emergency rate cuts, you never know if there's a black swan event, what might happen. Then expect the market to go more risk on, and the price of Bitcoin and risk assets to go up, as well as the price of debasement trade assets like gold and silver.
Hey, Dom, I just want to briefly mention quantitative tightening, because I often conflate the two. With quantitative easing, just for our viewers, in plain English, QT, or quantitative tightening, is the Fed removing money from the system by letting their bond holdings expire without replacing them, right? So what's actually happening? The Fed stops buying bonds. So when the old bonds mature, the Fed destroys the cash instead of reinvesting it. So in essence, the Fed's balance sheet shrinks. So it sucks liquidity out of the financial markets. So this is the opposite of QE, but I often conflate the two. So what does this mean for the price of Bitcoin? It's basically, it's resistance for the price of Bitcoin. It actually, is negative for Bitcoin, because they're not stimulating the economy with QE, they're actually shrinking it. So there's less money to be able to go into risk on assets like crypto. So
it's a long-term negative, or should I say headwind, against risk assets.
Yes.
And as I said, they've stopped quantitative tightening, so we're over the worst of it, at least for now. Yeah, but please, they have not restarted QE. Just because you're seeing headlines, reserve management and Treasury buybacks, and even the interest rate cut, none of that means massive liquidity boosts. None of it is technically QE. They're different reasons, different operations. So just keep an eye on them, guys. Don't get overblown with FOMO and rush out and sell everything you have to go buy Bitcoin or other risk assets right now. Just continue to have a plan, stick to it, DCA if that's your choice, and yeah, just continue to watch old Jerome and old Scott with regards to what they say.
Really helpful. I liked this review of the terms, because the headlines make you believe otherwise. And this, between the tool, the Bitcoin Reality Score tool, and these kind of tutorials and explanations, they really help to make sense of separating the hype from the reality.
Absolutely. Well, look, it's the first time we've done one of these, guys. Let us know if you found it in any way useful, or if you want us to explain more financial terms in basic ways and let you know what you should actually be paying attention to. You can do that by giving us a like, dropping us a comment, and please don't forget to subscribe. It does massively help the channel. And don't forget, when it comes to quantitative easing, reserve management, treasury buybacks, or interest rate cuts, you need to make sure that you've got your eye on the actual information that matters, because most will miss it, most will mock it, and most will wait until it's too late. But the 1%, they're with conviction.
Be a 1%er. Thanks,
guys.
folks.